Today is Saturday, January 25th. Wildfires that have devastated parts of the Los Angeles area in recent weeks have not only left behind unprecedented damage in Southern California, but they've also raised urgent questions for homeowners. And it's not just California. Extreme weather is wreaking havoc across the country now, all while many insurers are scaling back coverage. So where does that leave you and your home? Today, we're diving into the growing home insurance crisis in America. Our guest today shares the 3 reasons insurers are refusing to renew more policies these days and the specific tools they're using to identify the areas and homes they may want to drop. Amy Bach is a consumer advocate and attorney who is the co-founder and executive director of United Policyholders. That's a nonprofit nationally recognized for being a trustworthy and useful information hub for consumers with expertise on insurance trends, claims, coverage, public policy, and more. In addition to sharing why and how insurers are dropping policies and raising rates, she's sharing what homeowners in California and beyond can actually do about it. Welcome to the Newsworthy Special Edition Saturday, when we sit down with a different expert or celebrity every Saturday to talk about something in the news. Don't forget to tune in every Monday through Friday for our regular episodes, where we provide all the day's news in 10 minutes. I'm Erica Mandy. It's now time for today's Special Edition Saturday. Amy Bach, thank you so much for joining us here on the Newsworthy. I know things have been busy for you, so I appreciate your time.
Pleasure to be on, although I'm sorry for the circumstances that made you want to reach out.
To that point, California's governor has said these latest LA fires could end up being the costliest natural disaster ever. Do you agree with that? What's the latest in terms of the loss and damage that you're seeing?
We've been seeing projections in the days after the wildfires of anywhere between 20 billion and as much as 100 billion. Being a veteran of decades of post-disaster scenarios, I don't really put a lot of stock in the early projections because I think people tend to guess high on some things and low on others. For us, we are focusing on the people that had insurance and are coming to us for help and providing them the best guidance that we can.
Absolutely. And I want to get into some of those tips. But first, I'm just curious to get your take. There have been reports of people losing home insurance just before these fires hit, as well as concerns that rates will rise after these fires. What's actually happened so far that you're aware of, and how widespread is this problem?
So California has been in the grip of a property insurance availability and affordability crisis. So it's been hitting homeowners, it's been hitting businesses. People have had their premiums jacked up. People have had their policies dropped when they came up for renewal. And a lot of people have been really scrambling to keep themselves financially protected against something exactly like this. So, we kind of had a perfect storm going into this. And, there's just a lot of unknowns as to how this is going to affect us going forward.
So, in other words, people have been paying even more to keep their home insurance.
United Policyholders has been running surveys for the last few years where we ask people, what premium were you paying before you got dropped? And then after you got dropped, what premium are you paying and how do they differ? People have been reporting to us that their premiums have doubled, have tripled. It's just been a real shock for a lot of households.
To clarify, when you say after they were dropped, so to me, dropped means you just don't have insurance anymore.
So the way it works is most policies are year-long contracts. So you pay your premium, you have coverage for a year, and then when you get to the end of that year, usually the insurance company sends you a renewal offer and they say, your policy is going to renew and the premium is going to go up a little bit and here's the changes in the coverage and all that. Do you accept this? The new normal has been 75 days before the end of your policy expiring, you get a notice from your insurance company saying, sorry, we're not going to offer you a new policy when this one expires. The law in California is they have to give you 75 days notice. So a lot of people have been getting dropped when their policy comes up for renewal. People sometimes use the word canceled. That's really a misnomer. Canceled is when they cancel you in the middle of the policy. If they say you stop paying your premiums or, you're running a meth lab or something, that's when they can cancel you midterm. Very, very short list of grounds that an insurance company can use to drop you in the middle of your policy. We're talking about people who get non-renewed. And that has been the biggest problem for a lot of California households. When they go to the market to shop, it's so hard to find another policy. And a lot of people have been going into the California Fair Plan, which is our state-sponsored, privately run insurance company of last resort.
Yeah, so explain that a little bit, because California earthquake insurance is similar, right? Where basically you don't have options through private companies, so now you're going toward this state-sponsored program?
So it's an involuntary association of insurance companies. The law says if you want to sell home insurance in this state and you are an admitted company, meaning you're fully licensed and regulated, you must participate in the California Fair Plan. And your participation mirrors your market share. So, for example, a company like State Farm that has a fifth of the market here, they write 1 out of every 5 policies in California. They have about that same obligation to take care of a fifth of the policies that the Fair Plan covers. It's a little more complicated than that, but that's kind of the basics.
From the insurance company's perspective, is there a reasonable argument there that perhaps, they'll just run out of money and have to declare bankruptcy and not be able to help anyone? I mean, what's the other side to this?
This has been a really harsh wake-up call. We never envisioned a scenario like this happening because we never saw anything like this before. And by this, I mean, we never saw insurance companies hitting pause on selling new policies. We always saw them competing with each other. So understanding why insurance companies have hit pause, why are they so less willing and less interested in insuring homes and businesses in this state, the answer is kind of threefold. Number one, they are one of the first and big economic powerhouses in our economy to recognize that climate change is a reality, but actually start adapting their business operations in anticipation of there being increasingly severe and frequent extreme weather events that cause losses and cause people to file claims. They saw that coming years ago. They are for-profit companies. Many of them are publicly traded. They have shareholders they've got to keep happy. So it's a business for them. Insurance companies kind of project that they're there to take care of you and they're the good hands and the good neighbor. And they don't advertise, this is a business transaction and you better read the policy that our lawyers wrote and make sure that you get all that fine print. They don't tell people that. And so, yes, they have the right to drop a customer when their policy comes up for renewal. And really, all they have to do is give the customer 75 days notice and be consistent in applying their internal guidelines. I wish before we had this crisis, we had put more restrictions in on non-renewals and we had been giving consumers some kind of vesting rights, right? If I'm paying this insurance company for 20 years to insure my home and I never make a claim, I should get there should be some benefit to me from all this money I've given to this insurance company to protect me. they shouldn't be able to just strand me. But we don't have those laws. We don't have those rules. And now, because of the situation we're in, it's very hard for the legislature to try to make new rules and new mandates other than what we've got.
And just to be clear, this isn't just California. We're seeing some of these same issues in Florida, for example, because of hurricanes, right?
Florida was the first state to really feel the brunt of the 3 things that are happening that are causing insurers to retreat. Number 1 is climate change and their worries around it. Number 2 is InsurTech, this explosion in tools that insurance companies now use to sift customers and have a discard pile and a keep pile, right? What are those tech tools? Aerial images, artificial intelligence that sucks information out of public databases like permit records that the county might have on when's the last time you updated your water, your plumbing system or your electrical. And another tech tool that insurers are using are risk scoring models where they put a number on you. You basically, just like you have a credit score, now you have an insurance score. And that score is incredibly impactful in terms of what you're going to be asked to pay for insurance and what companies are going to be willing to offer you a policy. The better your risk score, the better your options. But people don't know how to improve their risk scores. They didn't even know they had a risk score. So that's number 2. Number 3 is that we've had inflation, and that has made material and labor prices higher. So insurers, those 3 things have come together to really shrink in private insurers' appetite for insuring real property. Florida got the brunt of it first because of all the hurricanes that they've had. We got it second because of the wildfires that we've had. Colorado is starting to feel the pinch as well because they've had a series of bad wildfires now. Insurance companies are highly sophisticated gamblers. They take risk for money. That's the business they're in. And in an era where risk is perceived to be growing, where risk is higher, they're going to respond. And that's what's happening right now. And consumers, unfortunately, right now, we don't have a plan B. We are heavily dependent on private insurance companies to insure our homes here in California.
Still ahead, Amy Bach gets specific about what homeowners can do now. And even if you aren't impacted this time, it could be invaluable information for your future. For example, she shares what you don't want to put in a GoFundMe page description that you might not realize, and what all homeowners can do to keep their insurance coverage high and rates low. But first, a quick break for our sponsors. This episode is sponsored by BetterHelp. Maybe you're ready for something to feel a little bit different in 2025. Whether you want to be the author of a whole new story for your life this new year, or just make a couple of revisions, therapy can be your sort of editorial partner, helping you write new chapters or just tweak a few sentences in a way that will actually feel better. In fact, in my experience, therapy can even help you recognize the stories you've been telling yourself about your life that aren't even true. From eye-opening revelations to simple positive coping strategies, therapy empowers you to be your best self. And it isn't just for people with trauma. Therapy can be helpful for all different types of people with all different experiences. BetterHelp is also fully online, so it's affordable and convenient, serving 5 million people worldwide, with access to a diverse network of more than 30,000 credentialed therapists with a wide range of specialties. And of course, you can switch therapists at any time at no extra cost. So write your story with BetterHelp. Visit betterhelp.com/newsworthy today to get 10% off your first month. That's BetterHelp, HELP.com/newsworthy. The Newsworthy is also brought to you by Ancient Nutrition. The human body is an amazing thing. It can repair and grow in ways that are still pushing the limits of what science can explain, even in 2025. At the same time, as you age, your body's natural healing and building processes slow down. I've already felt a difference myself. And while it's totally normal, that doesn't mean there's nothing we can do about it. A collagen supplement from Ancient Nutrition can help. Ancient Nutrition's mission is to create high-quality supplements that combine the best of ancient wisdom and modern science. Ancient Nutrition's multi-collagen advanced lean supplement contains 10 types of collagen from 10 real food-based sources. This formula is powered by clinically studied ingredients that promote fat loss and healthy weight management. Collagen can also reduce joint discomfort and improve the look and growth of your skin, hair, and nails. And it's really simple to use. I've been scooping some into my morning coffee or smoothie, and that's all it takes to get the benefits. Right now, Ancient Nutrition is offering 25% off your first order when you go to ancientnutrition.com/newsworthy. That's ancientnutrition.com/newsworthy for 25% off your first order. ancientnutrition.com/newsworthy. Okay, now back to our conversation. For someone who didn't have insurance, I mean, they're just relying on FEMA at this point, the federal government, to provide at least some payment to rebuild. What are the options?
So there are some pockets of money available through FEMA and the SBA. You can take out a very low interest loan through the SBA. Then people can turn to charitable organizations, Habitat for Humanity and the Mennonites. One of the things people are doing are using GoFundMes, which is good and bad. We are cautioning people, if you're going to set up a GoFundMe for yourself or somebody that you know, do not say in your GoFundMe message, I need money for my temporary rent and replacing my stuff. Because if you have some money coming in from other sources, you don't want to get in trouble for double dipping. So just be very general with your GoFundMe to avoid having somebody come back and say, hey, you already got some compensation there.
Even for people who do have insurance, what does the next few months look like for them in terms of interacting with the insurance companies, paperwork? I mean, you've just gone through this tragic, devastating, life-altering event, and now it's probably paperwork on top of paperwork.
My advice to people out there who are either going through this or have friends and family who are going through it and they want to help them is go to our website, uphelp.org, sign up to get on our mailing list so that you know when we're offering things. Now, for people who don't have insurance, there will be what are called disaster case managers that FEMA brings in, and they're navigators, right? Recovery navigators is another word some people use. And there's different agencies that will be bringing these information brokers in for people so that you can get assigned to one, and they will help you navigate all the different pots of aid that might be a resource for you.
So let's say homeowners want to rebuild in some of the areas that were destroyed. What are the insurance prospects for future coverage in those areas or even the areas surrounding them?
It's very hard to predict now what is going to happen to the market once the non-renewal moratoriums expire in the impacted zip codes. We know that it's already been really hard for people in a lot of other parts of the state. Now, what have insurance companies said since this fire? We know CSAA has come out and said we have no intention we're not going anywhere. We're here. This is what we're here for. We know that State Farm has said, not only have they not said anything about, continuing to shrink, but they did say that some of the homes that they had slated for non-renewal in the impacted zip codes, they were going to reverse and keep. And we've heard some statements from the California Fair Plan that they have the financial strength to meet their obligations. So I think a lot of what we're really looking at here is we're going to have to wait and see.
Impacted this time or not, what should homeowners know moving forward?
It's more important than ever that you try to keep your property in the best shape you can. Insurance companies are getting pickier and pickier about insuring older homes and homes that have outdated plumbing and electrical. So do what you can to make whatever improvements you can afford to do. If you're in California, you can go to our website and look at what's called our WRAP Resource Center, WRAP, that's Wildfire Risk Reduction Asset Protection. And it gives you the list of things you can do. And then we really encourage people to try to remove 5 feet of brush from around their home. That is the one thing insurance companies are looking to first. Do you have clear space? Do you have defensible space? The other things we encourage people to do is create a home inventory, take your phone out, walk around, put it on video and narrate, oh, here we are in the living room. Here's my couch that I bought at such and such a place for, 2 years ago, what have you. Make that inventory, send that file off somewhere to the cloud where you'll be able to find it. Finally, know how much you're insured for generally, like have a general sense of how much per square foot you would have under your policy to pay a contractor to rebuild your home from the ground up if, God forbid, it were to get destroyed. And if you have gaps, which most people do what you can to fill them. And if you can afford to put a rainy day bank account aside, or if you live in a state that allows you to do a catastrophe savings account, tax-free or tax-deferred, that's a really good idea in this day and age because, let's face it, one of the strategies people are using to be able to afford their insurance is to raise their deductible. That means you have a bigger dollar gap to what your insurance is going to pay than you had before. So you're going to need some cash for no matter what to for damage that's below your deductible and for things that your insurer is not going to pay for. So, just try to do the best you can to be in the best position to be resilient to natural disasters because they are happening more frequently. And insurance companies are definitely trying to shift more risk onto you, the homeowner. So just have your eyes open about that and do what you can to protect yourself.
Well, thank you so much to Amy Bach for joining us and sharing her insights. Please be sure to share this episode with anyone who may benefit from this information. You can also find the resources that Amy Bach shared in this episode today on the United Policyholders website, uphelp.org. That's up, U-P, help.org. Again, anyone affected by the California wildfires can use United Policyholders' Roadmap to Recovery to get free tips and expert help navigating the claims process. Thank you so much for listening today. We will be back again on Monday to give you all the news you need from over the weekend in just about 10 minutes. Until then, have a great weekend.